Hello, investors and traders, and welcome to the weekly market report. This is AJ Monte, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As I zoom in here, you'll see that I've left my lines on the chart from last week's report, with this green candle right here being last Friday, the 25th of September. And I drew this diagonal line here, mimicking the speed line from back here, as close as I can get from this angle here. And I ended the line right where I thought the moving average and the price would be intersecting, and that was right at 276.25. Now, as you can see, the end of that line matches up perfectly to the range for today's close, and that is counted as a win. Now, to get the full effect of these weekly market reports, I would suggest that you go back and listen to a few of them in sequence. So in other words, go back 3 weeks, listen to the oldest one first, and progress through them as you get to the most current report, and you'll see with your own eyes the evidence that we present and how technical analysis is such a great forecasting tool. So each and every week I repeat my analysis and I show the audience how I'm actually drawing these lines and why I'm drawing those lines up or down or even sideways, and hopefully you're getting a lot from this. So again, the diamonds hit the target precisely. I'm going to erase these lines and now show you what I think we could see for next week. This is a green candle, but notice we have a lower high and a lower low. So this basically defines a pivot point to the downside. In addition to that, we have that lower low and lower high on higher volume. So it's telling us that on the downward move here, even though it's a green candle, we still have a downward move. The volume is increasing because, again, that's a green candle, but we were down on the day today. And all that green candle means is that we opened up lower than where we closed. Or you can even say we closed higher than where we opened. But notice down here, as I zoom in, you'll see that the stochastics is overbought. And we have the CCI is now starting to pivot back down. And if we cross down below that black line, which is a zero line, it's also known as the momentum line, we could see lower prices. So I think what we'll see for next week in the diamonds is a downward move to fill this gap. I'm going to draw this gap, but I think we could even go further down below that gap, and that's going to be my target. Again, the end of that line is 271.57. The date that I have with the end of that line is October 7th, right there. See the bottom right-hand corner, it says 10/7/20. So let's see how that works out for next week. If you're long the market and you have profits in any of those long positions, you might want to protect those profits. It's really all that the charts are telling us at this point. Now, if we look at the spiders, ticker symbol SPY, you'll see once again that I left my lines on the chart, but I also left the lines on my chart for the last month. And again, each and every week, as I'm doing this week, I draw the lines out before there's any candles in place, and those candles show up the following week. And you can see week after week how accurate these forecasts were and continue to be. Now, we hit the target right there with the end of the line being 334.13. We hit that precisely on Wednesday. And now what's happening, I'm going to erase the lines now because I'm going to draw the new ones for next week. You can see that we have a long shadow above that candle. That's bearish. We have a gap below the market. That too is bearish. We have a slight increase in volume, very slight on the way down with a lower high, lower low. That's bearish. The stochastics is overbought. What would you rather have if you're looking to sell? Overbought or oversold? Well, I'd rather be selling in an overbought condition. And that's what we have. And we also have the CCI turning lower and very close to that cross of the momentum line. So for next week, I think we could actually not only fill that gap, but I think we're going to go a little bit further to go on to a price target for the SPY of 326.68. And again, October 7th is the time that I think we're going to have that. So again, for the short-term option traders, this is not only giving you some direction, but it's giving you a date. So, as an option trader myself, I normally don't like to buy the near-term options because we suffer so much time erosion. But at least if you have the direction or the probable push lower, at least that's putting some odds in your favor. Now, if you take a short position, then obviously you have to keep an eye on this high, because if you're taking a short position, you are now subjecting yourself to risk to the upside. And so you want to manage that risk if it moves against you. But again, my forecast is lower for the SPY. Now, if we look at the diamonds, ticker symbol DIA, you can see that I left my lines on that chart as well. With this line being my forecast, I said we would most likely move up to that 20-period moving average. We did that. We hit the target. And so what does that mean for next week? Well, take a look at this. We're following the same type of price action as we did in the other markets, with this being a lower high and a lower low. Well, there's also a gap below the market here that I think we will see fill, and that means that over the next few days, especially right up until Wednesday, I think we could see that fill and then maybe even bounce off of that. So I'm adding a little bit more to this particular index, because once gaps fill, there's an 80% chance that we'll see a bounce. Looking down below, volume is increasing on the way down. That's bearish stochastics, slightly overbought, but we have a wide divergence between the K and the D, so that's more bearish. And again, the CCI is turning lower. I would not be surprised to see that CCI cross down below that momentum line on Monday, Tuesday at the very latest. So again, protect your profits and make sure you're watching out for the downside. Now, I'm going to look at the VIX. Now, the volatility index is inversely related to the general markets, particularly the S&P. I said we would move lower. We did that. We didn't hit all the way down, but look what's happening here. As I erase these lines, the VIX is now starting to close back up over that 20-period moving average. All of the oscillators here are now moving up, and I think the VIX could actually go to an extreme, a little bit more of a steeper angle there. I think the VIX could see 32.17 by the end of next week. So keep an eye on that. Remember, the VIX is inversely related to the S&P. Now, if I look at the Qs, ticker symbol QQQ, representing basically the tech sector, same thing. Hit the target precisely right there. We actually hit the target on Monday and kind of hovered from Monday to Wednesday. Tried to go a little bit higher, failed, came right back down. And look at the price action over the past report. See how accurate this is? I'm going to erase this. Hopefully you're following along and looking at these in sequence. You can see how accurate that is. This is an inverted hammer. Now, for the tech sector, the key level that we have to watch out for is that moving average right there. And if it closes below the moving average, which I think it will, I think it's going to break right down below that on Monday, this could very well go lower. And I'm looking for a stretch down to 266.41. That will be by October 8th. Again, no one is putting a date on that, let alone a price target, and doing it in such a short-term forecast. But again, I'm getting a lot of feedback from our followers saying how valuable this is for them in their trading. And I hope that using it more as a risk management tool than you are as a forecasting tool, because this type of analysis will get you, or at least keep you out of trouble when the markets start to roll over. So that's for the Qs. You can see the stochastics is rolling over. The CCI crossed yesterday with a sell signal. End of that line is my target, and the support level for the Qs is going to be all the way down here, right around 260.32. Now, if you could, please do us all a favor. Click on the subscribe button if you haven't done that already. Click on the like button. Feel free to leave comments. But most importantly, please share this with anyone who you know, especially family members who are in the markets, because this is a great way to teach your family, your friends, your children, if you have children, nieces, nephews. No one's teaching this in school. And I hope that you can at least follow my repetition. And the way I teach is just to repeat over and over, show you the angles, show you the signals, show you the oscillators, help you read volume so you know how that volume plays in the move or the change in direction of that stock. And hopefully you're getting a lot out of it. So again, have a great weekend, and we will talk to you soon. So long.